Dealing with banks can drive you crazy, and here with 5 things that could tap into your nest egg is our financial contributor, Vera Gibbons. Big transition here from the Emmys to real life stuff, right? From fantasy to reality. Okay, let's talk about some of these different things that really drive us nuts. And one of the things that seems to be difficult to get a handle on are the fees.
Well, here's the thing, Harry. I mean, banks made $1.4 trillion in bad loans. So in efforts to shore up the balance sheet, they are slapping on more and more fees. Fees now account for 53% of a bank's income. That's up from 35% in 1995. So you've got all these nasty fees. Overdraft fees, of course, the big one. $40 billion in overdraft fees. And the average overdraft fee is $35.
Man. So you write that check. I mean, you have to be so careful about what you put in your account, what you take out of your account, how you transfer your funds.
Part of the problem, too, is, though, that they clear the largest ones first, so your rent, your mortgage, and then they work their way down to the smaller ones, so that $3 cup of coffee could conceivably cost you, nearly $40.
Right, a couple of $20 checks could cost you hundreds after a little while. Okay, one of the other things you say you have to really be careful of is lack of disclosure.
Well, the banks are required by law to disclose fees, interest rates to potential customers, but the General Accountability Office actually took a look at this, looked at 185 branches, and found that many are not complying with the law. 1/5 failed to provide lists of those fees when asked, and 1/3 failed to provide disclosure as it relates to those fees. So, and over 50% don't have any information on the website. So it's very difficult for consumers.
So things are going on in your account that you really have no idea about, and there's not even an explanation.
There's not even an explanation. These banks many of them are not complying with the law.
Wow. The other thing that this is really important: interest rates changing.
It happens all the time. I mean, they have to give you 45 days notice, up from 15 days that they used to, but they could easily take you up from, say, 18% to the default rate, even if you've done nothing.
On a credit card, for instance.
On a credit card, I'm talking about. Even if you've done absolutely nothing wrong. People are annoyed with this. It's happening all the time. Credit card satisfaction is at a 3-year low, and more people are switching to debit cards, which now account for about 50% of card transactions.
Very popular now. Low saving rates.
Terrible. I mean, banks offer all sorts of ways to save: CDs, money market accounts, savings account, but the rates are so bad that people are seeking alternatives. They're going to the smaller banks, community banks, credit unions, where you get higher rates on deposits, lower rates on loans, and overall just a better banking experience.
And do you have this sense, what's your sense about customer service? Because especially in New York, there's a bank on every corner now.
Well, a lot of branches are closing. I mean, if you look at JP Morgan Chase, some of the big banks, Bank of America, they're closing their branches. There's been a lot of industry consolidation. So the banking experience overall has really taken a hit, and customer service has really taken a huge hit, which is why people are going to the smaller banks, the community banks, and to credit unions. I mean, it's just a painful experience.
You've got to pay attention.
Pay attention.
There you go. All right, Vera, as always, thanks so much.